Here we are, Money Matters with Matt and Rich, episode 5.
So 5 already.
Doing something a little different today. Yeah. I'm starting it out.
I know.
Thank you for handing over the mic.
I know. It's such like an honor to start the episode.
Yeah. You know, you're handing it over to me. I appreciate that. Say hello to everybody out there.
Yes.
We've got what I think is going to be a good episode. Mm-hmm. We've got a few questions that were submitted to Matt McDonald directly that we're going to try and get you answers for as best we can.
Yep.
And Matt. Yeah.
Let's take it away.
What? Well, hold on. What happened yesterday in the last couple of days?
Yeah.
There was like a mortgage rate dip.
Yeah. So yesterday and Monday, rates surprisingly dipped. Ooh. Even after the federal government or the Federal Reserve decided to raise their interest rates.
Yeah. Typically we see federal rate goes up, mortgage rate goes up, but it didn't happen, at least over the last day or two, this time. What's up with that?
Yeah, so I think it's a common misconception that the mortgage rates always follow the federal fund rate.
Yeah, I mean, it typically does, right?
Typically, right? It can, but that's not because the Fed raised their rates. It's not directly correlated to that.
Yeah.
For those that don't know, the mortgage rates are based off of the 10-year Treasury bond as one factor, and then the bond market, the bond and security market. So there's literally something called mortgage-backed securities where investors buy and sell. Now, why it's not directly correlated with the federal fund rate is when the Fed raises their rates, generally investors act accordingly. So that's why, yes, it typically follows, but it's not directly based off of it.
Yeah, so there's another step in between.
Correct.
The Fed raising their rate to mortgage rates going up.
Correct. Right.
Yeah. Okay,
right.
So that makes sense. And I think that's great to know. Most people, myself included, until I got really into this business, were like, oh, Fed raises their rates, they're going to go up. Yeah, but there's another step.
Right.
And that could change, you know, depending on what the 10-year bond rates were doing.
Yeah, and I think the bond, I should have looked at it this morning, but it was approaching 3 at one point, and then it dipped. I should have looked up exactly what it was. I just know the height of it. We were pushing 3, which was like holy crap.
Yep.
But even then,
so that's not normal.
Right. But even then, where rates were still didn't really make sense. And when I say that, rates were still higher than what that bond was telling us it really should be.
Sure.
So when you just looked at the overall history of the rate environment, it just wasn't fully adding up. So it was a shock that rates fell, but when you really thought about it, it's like, well, it kind of makes sense because it was so high, it was probably too high, and now lenders are saying, oh, the Fed's doing what we expected them to do, so we can kind of mitigate our risk more versus we have to create little bit of a bigger spread, because if they raise rapidly and we have everyone locked in at 5 and our rates are 6.5, they're going to lose their shirt on everything, and now you can't get a mortgage because every lender just shut down.
Yeah. Which I have heard there's some non-QM lenders throughout the country that have stopped lending till the end of August.
Yep.
They stopped lending.
Some just stopped entirely. Well, I don't know if I can legally say the name.
Well, no, don't. It's a lender's business is to lend money, and when they're not lending money, they're not making business.
Right.
So, have they been lending under what really makes them money in the past, 12 months? Yes, probably.
Yeah. And I think a lot of people don't know that that's what banks do. So the big banks, retail lenders, they hang back for longer because they are trying to capture as much business now versus thinking long term. And that's why you hear of all these massive cuts and layoffs at bigger retail lenders or banks. They're cutting their margins. They were cutting their margins so thin where now they have to catch up somehow. They have to make that money back somehow.
Right.
When banks are losing hundreds of millions of dollars on mortgages, they can't just keep doing it to get the business. They now have to be like, actually have to cut somewhere else and raise because we have to make up that somehow.
Right.
And that's what we're seeing happening is people are freaking out on the bank and retail side.
Yeah.
So when the broker channel dips because we moved quicker to accommodate for that because we didn't want to spread our margin thin. Now, more long term, we're actually lower or we're at par with banks.
Yeah.
That's really what we're seeing, especially here. Only time someone's beating us here is if they go through their own bank and they're getting that, half a point discount,
Some sort of discount
for
from
being
them.
a member at the credit union. It's
Sure.
the only time we're seeing anybody beat us right now. So
Sure.
we're now in the better position because we were thinking long term, not just like, let's just get the business now and hope to God that these
that it
things don't
stays.
keep rising.
Right.
Like,
Yeah, so I mean, it's in regards to like rates and home buyers, from my perspective, who cares what rates are?
yeah.
And quite honestly, from a buying perspective, who cares what the seller's asking? It's
Right.
an asking price.
Right.
Like, so over the last 2 years, we've been saying, okay, if they're asking this, I've got to give them 30, 50 grand more, and I've got to be crazy. Let's look at those 21-day on-market homes. Well, if you like it, let's submit an offer that makes sense to you from your monthly payment perspective, right? A different mindset than we've been in. It's always been at least what I try and tell buyers is it's always been about that monthly payment. Like, what is that monthly payment? Does that work for you?
Are you fitting the house in your budget?
Yeah, exactly. Fitting into your budget. And if we've got to go 50 over, does it still fit in that budget?
Right.
Now we're going the other way. Believe it or not, we're going to be going the other way. Not every home is going to go that way. Don't get me wrong.
Yeah.
But there will be homes out there that will go the other way. It's like, okay, if asking price doesn't work for you, but 30,000 below does, and you like the home, make the offer.
Right, because we may actually get it.
If it doesn't work on this one, keep moving forward.
Right.
Like, keep moving forward. Just a little bit of a mindset shift from the previous years, I think will help buyers that still want a house, need a house, and have them get a house.
Right.
I know it's easy for me to say, right? Like,
Yeah,
because
we're the ones that are in the business,
Yeah.
and we're not actually spending the money.
Yeah, exactly.
Like,
I'm
so
happy
it's
to make the
easy.
offer.
Right.
That makes sense to you, though.
Right.
Like, if there's no other offers, it's been on the market, 20, 40 days. I'm going today to see a house been on the market for about 50 days.
Yep.
Okay.
Right.
50 days, and it hasn't been under contract a single time.
Right. Right.
I talked with the buyer. I said, if you like the house enough, make the offer that is within your budget, makes sense to you. If not, we'll keep moving forward.
Right.
You know,
Yeah.
keep moving
I'm
forward.
actually glad you mentioned that because one of them that I got under contract this weekend was an estate sale that's been on for 45 days and had an $80,000 price cut, and it only took like 10 grand over. So it was still $70,000 less than they initially asked for.
We're asking, right?
And the only reason these guys went 10 grand over is because I said, hey, rates just dipped. Here's your payment at this number. I know it seems crazy to buy a house at this number. We've been talking about where they wanted to stay around.
Yep.
And they saw the payment and they're like, oh, that's actually lower than the previous numbers that we were looking at lower prices because the rate dipped a half a point.
Yeah.
So they were like, yeah, let's do it.
Jump
and then they
on
got
it.
the house.
Yeah.
Right. So they've shifted their mindset now that rates dropped to that payment number, which is what we were talking about.
Yeah.
And how, when the rates drop, you can shift your mindset a little bit versus, when they are higher, you do want to be like, hey, you want to make sure it fits in your budget, obviously.
Yep.
But you also want to make sure the house isn't going to come depreciating in value over the next 6, 12, 18 months. And then now you're in over your head.
Right. Well, and from that perspective, if the home price comes down, does your monthly payment change?
If as long as you're in a fixed rate mortgage, your home
value comes down 30 grand, your monthly payment stays the same.
Yep.
Really what that means is, okay, I might need to live in this a little longer until it comes the other way.
Correct.
Because it will.
Right.
Like everybody that sold in 2000 or bought in 2005 and at the highest of the market, and then it crashed a few years later, if they held on to it from 2005 to 2018,
They probably made money.
they were making money.
Yep.
2015, they were making a little bit less money, but they were making money. Right. So, okay. And
again, that's the worst real estate crash that we've ever seen in the country. And in a 10-year time frame, when they bought at the high, went through the crash, they still were at worst breaking even. And again, the worst real estate crash we have ever seen.
And as long as that monthly payment, obviously there were other loan factors in place for a lot of these people because their monthly payment actually did change
on them.
So that's the problem that happened then.
Correct.
But if it doesn't change, okay, monthly payment's fine for us. Let's stick it out. And obviously no other life factors change, right?
Correct.
Like loss of jobs or things like that.
Right. Things that you can't control.
Yeah, exactly. So yeah, like I said, if it dips in 30 grand and your monthly payment's still fine, hang on to it for 5 years and you'll be back up and above that in no time.
And I urge people the other way too, right? If when I bought my house, my appraisal came back and I had $26,000 in equity. That doesn't mean that my payment goes down. My payment's still the same.
Yep.
So equity, I think a lot of people get wrapped up in this term of equity. I need equity. I need it. It's like, okay, equity is just a fictitious number unless you're planning to pull from your house to take cash out.
Yep.
It's just
selling.
It's a fictitious. It's a completely fictitious number that can change at any point in time.
Right.
So a lot of people get caught up in it, and obviously, it's helpful to know how much equity you have if you are going to sell or you do need cash of any sort, but if you're just someone that's going to live in there for 10 years, the equity is going to change year to year, month to month.
Equity, exactly. Equity is important when you're flipping.
Yes.
When you're creating that equity, or creating that extra value.
Right.
But from a
average,
live in and hold
the average
type
person,
of situation,
it doesn't mean a lot, right? Unless you're planning to pull cash out.
Right.
It's different. You need to know if you're planning on taking a HELOC out. It's different. You got to have certain loan to value, so you need to have certain equity positions. Like a first-time home buyer that just bought, you probably just put 3 or 5% down. Now you have a 6% equity. You still can't do anything, right? So it's like it's all a waiting game for a lot of first-time home buyers that get wrapped up in that work.
And those buyers are likely in that home for 5 to 7 years.
Yeah. Right.
So from a national trend perspective, that's nationally first-time home buyers are 5 to 7 years.
Right. And I mean, it's just one of those things where, a lot of people get caught up in the federal, to go back to it, the federal fund rate and then the mortgage rate. And obviously it's a big deal. What they do is a big deal and how it affects the economy and all that stuff. But if you're going to buy a house, just buy the house. Again, if it fits in your budget, real estate's going to appreciate over a certain time frame. It may decrease year over year, but it may not. It's probably not going to over a 5, 7, 10-year time frame.
Especially as you're making those mortgage payments and you're paying down the loan, so you're increasing your equity position there,
right?
As well as it likely appreciating in value,
right?
Because they don't make any more land.
No, they don't. They're they may try, but they don't make any more land.
Yeah, exactly.
And then another one I got that I think is a real big one is the difference between an FHA and a conventional, whether it's loan, buyer. They weren't very specific. It was just FHA versus conventional.
Sure. But so from a buyer side or a seller side?
Yeah, I think it's like we can add a lot to this because from the loan side, it's very different. From the agent side, whether you're a buy side or list side, right, it's very different. So I want to educate people on the fact that FHA is not a first-time home buyer loan. It can be, but it's not the first-time home buyer loan.
Right.
All an FHA loan is a loan that's insured by the government. So they have looser qualification standards, and your mortgage insurance is higher. Yep. Your rate is lower, but this is why rate doesn't always matter, because your rate is lower than a conventional loan, but your mortgage insurance is so much higher that your payment's about the same.
Yeah,
so
it's a wash.
It washes itself out.
Yeah.
And why is the mortgage insurance higher? Because they're taking lower credit scored buyers with less down payment with higher debt to income
So
ratios.
there's a higher risk for the lender.
Yeah, there's a higher risk for the lender to default, and obviously once the government starts insuring things, they want to make sure that, if somebody does default, the money's there. So they have to have a certain reserve requirement. There's a lot to it, but it's not just your first-time home buyer loan.
Yeah, well, first-time home buyers, and you're probably going to get into this, could be either or, conventional FHA, depending on their situation.
And that doesn't mean you can't get into it, right? If your situation fits that, let's run with it. Let's get you into a house.
Right.
But a conventional loan.
What's the minimum credit score for FHA?
Generally, it's 580 technically.
Yeah.
You get dicey when you get down there. You need a lot of compensating factors.
Yeah.
600 is really the cutoff, because 580 you need reserves. You need more than 3.5% down. It's such a specific buyer.
Yeah.
Over 600, okay, we can start to really play with it.
Yeah, you can be a little bit more on the the normal,
the normal,
3.5%
yeah,
down and stuff like that.
Right,
Yeah.
and I think that's an important thing for people to remember when they read these guidelines online. Yes, you can technically get the loan, but you don't understand the actual other factors that are going to go into it. You cannot put 3.5% down with a 580 credit score.
Yeah.
Just like for a conventional loan, a 640 credit score, you cannot put 3% down. You are such a risky buyer at that point.
Yep. So like reserves, I think is important. Like that's like liquid money or ability to get that liquid cash.
Yep. So you could have a retirement account and it counts as reserves because you can technically pull it out. You're gonna get penalized, but you can technically pull it out.
Yeah.
So it doesn't need to be in a checking account or a savings account. You can have a mutual fund account. You can have, like I said, a retirement account. Anything, any sort of monetary asset.
Yeah. So you need some money in reserves to be able to, at that lower credit score, to be able to get FHA. So, okay. And
and then just to briefly touch on conventional, it's just it's seen as the better loan program. And again, rates are higher, but it's a better loan program. Why is that? Because the qualification standards are stricter. So if you get an offer with a conventional loan, it is more likely than not a stronger buyer. Not in all cases, but in a lot of cases it is. And then down payment, it's either 3 or 5% down for your primary residence. So 3% down for first-time home buyers, 5% down if you're not a first-time home buyer. That's still unbelievably low. You can buy a $300,000 house for $15,000 down, which again, $15,000 is a lot of money, but when you're buying a $300,000 house, it's not.
Right.
And then conventional, your mortgage insurance is significantly cheaper and it can drop off. So it's
when does it drop off? What's that, 20% equity in the property?
So you can request to have it dropped off at 20% equity. It automatically drops off at 22%.
22. Okay, that's the number. Yeah. All right. So automatically 22, but you gotta call though.
Yeah. So you have to call. You have to get an appraiser out to the property just to essentially like recertify the value.
Yep.
They don't have to go through a whole appraisal report, but they just have to assure the lender, yes, the house is actually worth X
that
amount.
Money. Yep.
Which is why through the last 2 years, people that got into a conventional loan in 2020, you could just get rid of their mortgage insurance. They could have put 3% down, but they got rid of their mortgage insurance in a year because they just had somebody go out and say, the house is worth $500, not $375 anymore. Boom, gone.
Just because of the craziness that we just had.
Exactly.
Yeah.
Exactly.
Yeah. So it could take no time at all in that situation, or it could take the normal, multiple years. Whatever that ends up being, whatever the appreciation ends up being over those multiple years.
Exactly. But from an agent perspective, let's start buy side. So let's say, the loan officer says, hey, I got Sally pre-approved, but, FHA loan, these parameters. Do you, let the buyers know, hey, there's certain places we can't go and see? Do you let them know, all right, these are areas maybe where FHA is more prone to get accepted? Like, how do you kind of now, if you do, shift kind of the mentality there?
Yeah. So, again, it's about a shifting mindset in this different market. I don't care, FHA, conventional, cash, whatever. Like, let's look at homes one way or another. The homes we look at will differ depending on those the financing type. So, FHA, hey, no problem. Let's look at some homes. Let's go into certain markets. Again, it's going to be market specific, but within that specific market, it'll be home specific.
Yeah.
So if you want to go to Salem, FHA buyer, great. 3 days on market, not likely.
It's probably not going to happen.
Not likely. Let's wait. If you really want that one, let's wait until it's on the market 20 days, 30 days. But if you see a home in Salem that you're like, I want to live in Salem, let's see the homes in Salem, great. Let's wait until that one's been on the market a few days, or we're going to go look at homes that are on the market 14, 20, 30, 50 days. Let's look at those ones first because you have a higher probability of getting those ones right out the gate.
Correct.
Versus waiting for these other homes to hopefully be on the market for 10, 15, 20 days, right? First weekend houses, let's not look at those. Let's not waste our time and let's look at these other ones. Even conventional, same thing. If they don't want to compete and they don't want to get into the mess and they don't have the ability to do that,
exactly, right?
Then let's go into that same Salem market. Let's use that for example. You don't want to be the crazy, messy compete. Let's wait, bypass that first weekend. But if it's going on for another weekend, all right, let's go look at it.
Right.
Like we can tighten that timeline a little bit.
Right.
If you really don't want to compete and you just want to get a home for close to what they're asking, all right, 21, 30 days. If it's been on longer than 30 days, FHA, conventional, whatever it is, cash, let's go look at it.
Right.
Make the offer that makes sense to you.
Correct.
If you like it enough, let's get the offer in where the monthly payment is good. No, you're probably not going to get a 70 grand price reduction. Hopefully you do. That'd be great.
That'd be amazing.
But it is house specific
Yeah.
and price point specific.
Right.
So, if you have questions about that, obviously contact me.
Yep.
But it's nationally, the market is one thing, but our market here in New Hampshire is separate.
Yep.
And within certain towns, it's completely separate.
Yeah.
Because Concord's going to be different than Manchester, is going to be different than Salem.
Right.
Nashua is going to be different than all of those.
Right.
Portsmouth is going to be completely different.
different.
It just depends on where you're looking. They're very specific markets.
Yeah.
And knowing that, understanding that is key.
Mm-hmm. And I think it's also key, actually just popped in my head to bring up, condos. You have a condo buyer who, they want to go, they're qualified for an FHA loan.
Yep.
That actually affects you more than I think people understand, because the condo association as a whole needs to be FHA approved,
right.
Which the last 2-3 years, condo associations have not been getting FHA approved because there's been so many conventional or cash buyers. So we're seeing huge issues right now with FHA condo buyers. It's unbelievably difficult to find them something.
Right. So the association already has to be FHA approved association. However, I think what you're saying too is you can get it to be an approved FHA condo, but the likelihood of that happening when there are so many conventional cash buyers is less.
Yeah. Because you would have to make your offer contingent upon the fact that the condo gets FHA approved, which is going to take about 3 weeks, which means we can't order an appraisal for 3 to 4 weeks, which means you're probably going to close in 45 to 60 days. And I don't think a lot of people want to wait that long. Now, if you're the only offer, that could 100% work.
Exactly.
But
that's again very specific to the home in the market in which you're looking.
Correct.
So it's there's not a blanket statement. That's why working with the local professionals is key.
Yeah.
To understand that.
Right.
Oh yeah, great. Look at this condo.
And just the difference between the loan limits. That's something I actually ran into 2 days ago.
Per town and per county.
Right. For FHA and VA, the county matters drastically, and especially in New Hampshire, because Rockingham and Stratford are considered high balance counties, or high cost areas is the actual specific term.
Even though Rockingham County spreads from
I think it's like Salem to like Portsmouth.
Yeah.
It's this
and
weird,
there's a lot of towns in between that,
yeah.
which aren't necessarily high cost,
Right.
but because that county does include high cost areas, Portsmouth, Salem.
Right, yeah.
Now it brings everything up.
It has to bring everything up.
Yeah. But that's a good thing, right? Because a VA or FHA could get into Kingston or Fremont at this gorgeous big home. Yeah. Because their loan limits are higher.
Correct. Where it runs into an issue is good old Hillsborough. It's going to always be the issue in New Hampshire for New Hampshire lending and buyers is Hillsborough County, because they are not considered a high cost area, but they are starting to, the home prices are starting to reflect high cost areas.
Yep.
So you can only get an FHA loan in Hillsborough. I believe it's up to about $430,000.
Yep.
Which
that is slim.
If you're buying in, Bedford, you're probably not getting an FHA loan for Bedford. But hypothetically for Bedford or Goffstown, I think is in Hillsborough. I forget if Hooksett is. But even like Nashua is Hillsborough. Amherst, Merrimack, all those areas.
Those are high cost areas.
Those are high cost areas,
county.
but they're in the county because unfortunately the county then goes, I don't even know how Hillsborough is drawn, but there's obviously a lot of low cost areas in Hillsborough. So it's not reflecting it. So, you have a buyer that says, I want to shop in either Londonderry or Manchester. It's like, well, we may need to pick, because I need to know, especially if you're pre-approved for $500,000, I need to know which one you're going to be in, because one of them you can get the loan and one of them you can't unless you put more down.
Right.
And I think that's important to So then that's why, if the agent's kind of not hounding you, but hey, we need to pick a spot. That's why. They're not just doing it to boil down your search to where you're uncomfortable. They're doing it because we have to.
Yep.
We have to physically do it. And we're one of the only states that actually has that big discrepancy. Mass, it's pretty much all 770 unless you go way west. But it's everywhere that you would imagine, North Shore, City, the Cape's actually higher. It's like 900 grand. Wow. So it's like, it's really just Hillsborough that causes issues. But then from the list side, when you see an FHA offer come in on a list side, again, does your mentality change when you pitch that to the seller? Do you notice the sellers have a reaction to it? What do you see from the list side when an FHA offer comes in? If you've even been seeing them, I should even say that, because honestly, it's been slim.
So it's gonna depend again on the house in the market or town that we're talking about.
Yep.
Conventional has been the only thing coming through because that was all that was getting accepted. So most people were conventional. I had a property in Hillsborough, New Hampshire, Hillsborough County, that had, when it had 3 offers, had a conventional, FHA, and USDA. So USDA.
Oh God, USDA. I mean, like
0% down, right? Like. They were approved for FHA and USDA, but obviously the USDA is better for that buyer.
Correct.
They offered more. The other ones wouldn't. Went with the USDA.
Right.
No issues. 0% down.
Right.
Closed.
So let me ask you then, and I can probably help answer this too. When you say there are no issues, what issues could possibly arise with an FHA? And VA and USDA do fall into this specific thing that we're about to talk about falls into it too. So with those categories, what potential issues, when you say that, could pop up?
So they look, if you're not conventional's like, is the home standing? Great, perfect.
Yeah.
The appraisal says no problem. But when you're talking about FHA, VA, USDA, these government-backed loans, they're looking for safety and condition. Just as from my experience, I've seen the most condition issues being with on like some steps, having loose boards on the steps.
Yep.
Just screwing those in and that's done, right? No big deal. But it is one of those things.
Right.
Chipping and peeling paint, the biggest thing, because any homes pre-1978 are said to have lead paint contained on the property.
And I'm so glad you brought that up, because I get that asked a ton why that matters. It's like, well, if you have lead paint, or if there is asbestos under the paint or in the paint or in anywhere, and the paint is chipping, and you have a child breathing in the asbestos, it's probably not going to end well.
Right. Right. And you're gonna have to take care of it anyways.
Right. Exactly.
And so they're looking at handrails, things like that, which are just, in the grand scheme of things,
it's not
huge.
The end of the world. Like, I always say if a child can get hurt in the house with anything you see, it's probably not going to pass. If the window is rotting to the point where I can push the window out, you should probably fix that. You should probably fix that before you buy the house.
A kid can get hurt on anything, though.
Fair.
So
that's fair.
There's a kitchen countertop.
Yeah, that's
They can climb on that and fall off.
Valid.
When you got kids, you're just like, they'll get hurt on anything.
Right.
They can be walking.
Right. And honestly, when I talk to agents about this, because I was very curious when I first started, why? Because I didn't know. Especially when I first started, I'm like, why, what could pop up? Like, what's the specific things that could pop up? And that's what I hear a lot is, a lot of agents don't actually know the specifics. And I think that's why they're so afraid of the FHA and the VA, because they don't actually know.
They don't understand
and
it.
if you just send us pictures of the house, like, I'll be able to tell you right away. Yeah. Unless it's something stupidly specific, which I actually almost ran into in a house that I bought, for your knowledge, if there's a public sewer line that runs up the road and your house is on private septic, FHA won't take it. You have to connect to the public line. There's no way of knowing that until the appraiser goes out, unless the buyer told you or the seller told you. There's no way of knowing that. So I think that's the things that they're afraid about is, I think it's going to be okay. It's like, unless it's such a specific thing like that where it's like no one could foresee that, you're generally going to be okay.
And from a seller perspective, if you've got multiple offers and they're, different financing types all around, then okay, you can choose, right? Choose which one you think is going to be more safe, secure. We're getting into a market where you might not have multiple offers.
Correct.
There are homes that don't have multiple offers out there right this minute.
At this very second.
So if you get an FHA offer, USDA offer, VA offer, what other choice do you have?
Right.
Let's plan and prepare for that. Some buyers with those loan types may be willing to make the repairs and corrections there on their own.
Yep.
No harm to the seller. Or they're willing to split the cost. No harm to the seller. If they're not willing to do any of those, and there's no other offers, and you've been on the market 30, 40 days, your other options are to do them yourself so that buyer can then do it.
Yep.
Or make your home more appealing to the conventional buyers, which may mean spending money to increase the condition of the home or reducing the price. Because those are the only other two things you can do.
Two things you can really do.
It's about location, price, and condition. Yeah. That's what gets you a sale.
Right.
3 things.
Right.
So
and you can't change the location like we talked about.
Can't change the location. You can change the price or the condition. So do you want to spend money to increase the condition? Do you want to drop the price? And at that point, you might as well just work with this FHA buyer and come to some agreement and sold the home.
Right.
Instead of being on the market, another 30, 40 days.
Right.
But again, it's all depends on that seller situation.
Yeah.
What they're doing next. Yep, and what they're willing to do.
And I know, like, for me, I specify that, we would pay for anything that needed to be done to meet FHA approval.
Right.
And now, again, I closed the end of June, so I bought in May. So it is a very different market, even in these months, and I acknowledge that. But that's just something that can be added to it. If the buyer has the funds and is willing to put that in, that's something where, again, to go back to the buy side, that you could put in to help them get that. Hey, buyer will make any necessary repairs out of their pocket, and the seller has nothing to worry about. Could it delay closing because we need to get work done? Sure, but it's no more money out of your pocket.
No, and it's no longer than if you did any necessary adjustments that you would have to wait anyways.
To meet it, right. You would have to wait, and you'd probably have to wait longer because you'd probably have to do more work to appease a conventional buyer versus the FHA buyer. So it's all give and a take. It really is.
Well, I know we have more questions, but I know our time is also running thin.
Do you want to do one more quick one, or what are you thinking here?
Let's do this. We'll do these ones another time.
Okay.
I think that's a great option. I think we've got a lot of good advice there. Today.
Yeah.
And we will hopefully have that list being more questions, and we'll cover them as we go through.
Right.
And we'll make sure that we get all those questions answered, either individually or together here.
Right, right. And then, if you have any questions on FHA versus conventional, contact either of us. We're both knowledgeable, obviously, on it, and especially from our different fields, so we can really help guide you. And then, obviously, if you have questions on what rates are going to do, I don't know what they're going to do, but I can, at least
they're going up.
I can at least, tell you that I don't know what they're going to do. But if you have any questions on where market's heading, stuff like that, obviously our contact information will be in the description. We would appreciate a like and subscribe and a follow and everything that has to do with Instagram and
check out
YouTube.
www.findnhomesforsale.com if you want to start searching for homes or get in contact with me and my team. At Rich J Racine Instagram or at Racine Realty Team. Instagram. You can check us out there. Shoot us a message and let us know what you're looking for, what you need.
And I'll reiterate, guys, that website that Rich has is awesome. It's like its own little MLS on it. Honestly, you can really look for houses on it, and then you can contact Rich from that website and then go see the house
or
instantly.
Matt too.
Right, you can contact both of us through it.
Yep.
It's a great resource, so I would definitely check it out. If even if you're literally just starting the process, just to start seeing where it is, we can help you guys out. Either talking numbers, talking about the market, getting in contact with an agent. It's priceless. It really is. So check that thing out.
Sounds good. Cool.
And that's why money matters.
That is why money matters. Very good.